Hello and welcome to Talk Financial TV. Today, 1st of June 2012. Talk Financial TV is a medium we use to communicate with our clients and with visitors to our website talkfinancial.ie, whereby we outline in brief summary topics of financial interest from around the world. Today, the 1st of June, saw the Irish population vote in favour of endorsing the Fiscal Impact Treaty at a margin of approximately 60% in favour. While the turnout was relatively low at about 50% of the electorate, the fact is that of those people who did vote, about 60% voted in favour, and therefore we can expect to see the Irish Government enshrine into our Constitution the details of the Fiscal Impact Treaty, assuming that 11 of the countries across the Euroland area continue to endorse the treaty itself. The pressure now will be on the Irish Government, therefore, in our view, to deliver on its belief and on its statement that a positive vote will improve international investor confidence in Ireland, through which it will help to improve employment, and budgets that could have been significantly more difficult had we voted no should not be quite as severe as they could have been. In our view, we don't really believe the issue of budgets not being too severe, because we still need to extract about €8 billion from annual expenditure over the next 3 years through the next 2 or 3 budgets. And therefore we believe we are still in for clearly a time that will be marked by measures of further austerity, tax increases and public expenditure cutbacks. Despite the fact that we have voted in favour of the Fiscal Impact Treaty today, Ireland only forms about 1.5% of the Euroland area, and therefore it is only of minor significance in our view to other countries in Europe. The euro is still clearly in a very serious crisis. €97 billion has been withdrawn from Spanish banks since the start of the year. Italy is hinting that it will require further European and ECB support, and Greece is on the brink potentially of leaving the Eurozone area, subject to the outcome of its second election in the space of a month. Ironically, Angela Merkel was this week voted the most trusted politician in Germany, which is a remarkable achievement considering the fact that her party has taken a real hammering at the polls in federal elections for the last several number of months. Those of us who speculate would hardly take a bet on her not being re-elected as Prime Minister in 2013, but we could clearly be wrong, because being voted the most trusted politician in Germany in the midst of this current pressure is in itself an amazing achievement. So where is the euro going as a currency? Well, in our view, if the euro currency is to be sustainable into the long-term future, we probably need to develop a much closer fiscal union with our European colleagues. Did the Irish people really vote for European fiscal union yesterday? Intentionally, probably not. But if the euro currency is to work, we probably do need much greater fiscal union. That means one European central bank that controls the expenditure of each individual country's central bank. It probably means some sort of standardisation of tax measures around the Eurozone area, and a general linking of euro-wide states in a much closer manner. To put this into perspective, could you imagine an American dollar with 50 different American states all applying the dollar in a way that suits them individually? What we would have is chaos. What we do have with the American dollar, albeit a weak currency at present, is we have got $1, 50 states all working under a national government which controls the movement of the dollars through Washington. We probably need that at some point in order to make the euro currency work on a sustainable level into the future. Either way, it is our view that the real pressure in the Eurozone area, and in particular in Ireland, is the issue of bank debt. We need to remember that in Ireland, we still have a working population of 85% of people. We've got a very, very strong export-led trade, and we have got a very educated workforce. The only thing that is really holding us back from recovery is bank debt that was transferred from banks into sovereign debt. They're now suggesting in the Eurozone area that instead of recapitalising the Spanish government and transferring bank debt over to the Spanish government, they may well recapitalise Spanish banks directly. And while that may well be an easier solution for the Spanish taxpayer, it may be unfair relative to what happened in Ireland, and it is still not a long-term viable solution. Long-term, it is our view, we cannot afford to repay our sovereign debts, nor can Italy, Greece, Portugal, Spain, and probably other countries. And until bank debt has been written down or written off, we will face measures of austerity, and we will find it very difficult to recover from the current crisis that we face. Therefore, in our view, we face, whether we like it or not, a greater purpose of fiscal union, and we have to make a call, in our view, on the purging or the writing down of banking debt or the transferring of banking debt back into the banking sector itself. On a slightly different note of interest this week also is the fact that Facebook, the biggest launch of any one company onto the stock market in the history of stock markets, has fallen by 25% in value in the first 2 weeks. And this demonstrates the real risk in investing in equities. You need to know what you're investing in, you need to know what is the risk, what is the measure of that risk, and how to hedge your bets against that risk. Facebook is simply another example of where people can make a lot of money and where people can lose a lot of money. At Talk Financial, therefore, in concluding our news bulletin for this week, we suggest a few things to keep in mind. Number one, Eurozone remains highly volatile. The positive vote from Ireland does not get Ireland out of jail, and it does not get Europe or the euro currency out of jail. We still face austerity, and we still face currency risk. Equity markets remain highly volatile, as reflected by Facebook, and therefore we suggest to you that you consider always having a balanced, measured approach to any investments, that you diversify by currency, that you diversify by asset base, that is, and most importantly of all, that you get qualified advisors from people who are fee-based. If you get financial advice from a commission-based office, you're getting a sales pitch. You get qualified financial advice from fee-based advisors such as in Talk Financial, whereby we've got the financial background, the financial expertise, the economic qualification and understanding to give people true, objective and honest advice whereby you know what you're doing with your money. Until next time, thank you for listening in to Talk Financial TV, and visit us anytime on talkfinancial.ie. Goodbye.